So futures were down a little bit going into the jobless claims report. Jobless claims were flattish, and the market dropped a little bit on that. That's one problem. The other problem is dollar's up 4 days in a row, folks. That's an interesting trend. We haven't seen that in a little while. And remember, generally weak dollar, market generally likes weak dollars. So keep an eye on that. Sectors, all 11, basically down this morning, various degrees, but energy, again, leading on the downside. Tech, industrials, healthcare, consumer staples, doesn't matter. We had General Mills was up earlier on. I think we have a real problem here. The average stock is not doing very well. Average stock, what's that? Well, watch the equal weight S&P. The RSP. That is essentially at its lowest levels since going back to sometime in mid-July. That's a downtrend, folks. In fact, there's a lot of stuff in downtrends, essentially. Energy, just look at what's going on in September here. Energy, banks, even technology, small caps. This is the S&P small caps. These are all in downtrends right now. Tech's a pretty big part of the overall market, and so are banks. Tough to move when techs and banks are in a downtrend right now. As for investing styles, I know we love to talk about everything. Growth, value, quality, momentum, low volatility. It doesn't matter. Whatever investment style you have, they're all rotten in September. Everything's down 5 to 9%, as you can see here. Take your pick. Even value's not doing very well. You can't blame it on traders for getting worried. I mean, look at the half dozen buckets that we always talk to, the stuff that moves the markets, okay? I only see one that's been a clear positive in the last few weeks. So the vaccine and treatment, that's number one. That's a positive. We're still getting good news on that. That's good news. But the reopening and stimulus, there's been a lot of negative headlines about the problems getting things through Congress. The Fed may be done. China trade, generally the headlines have been negative on that. Valuation, I think there's a problem here. I think tech stocks have benefited from coronavirus and work from home, but nobody knows how to value them. You guys love talking about Apple. I keep bringing this out. Just look at Apple here in the last couple of months. Apple goes at the end of July from $100 to $138 in the month of August, and then goes back all the way down, you see here, at $107. So let me get this right. We rally 40% in the month of August, and then we're down 20% in the month of September. Does that make any sense to you for the largest company in the United States? Does that tell you that investors are kind of clueless about how to value Apple? And this is Apple. Imagine everybody else that's much, much smaller and whose earnings trajectory, shall we say, is a little more difficult to figure out. It's no wonder everybody is confused at this point. So when I'm confused, I always call my old buddy Art Cash and ask him what goes on. We did a Trader Talk story on this morning. Art sort of explains what's going on with the market. But he tells me, you're looking for logic in a market that's not logical. It's momentum driven. They ride the stocks up on the COVID stories, the COVID stocks up like Apple. And then when they get too frothy, they hit sell stops. And the momentum guys have very tight sell stops that they will sell at. And then they move down really fast. That's what happened to Apple. So he's big on watching the sell stops. Why not listen to Art? We're going to have him on at 11:30 Eastern time. He's going to explain all of this and why we should worry and not worry. Certain things we should worry about, certain things we should not worry about. My old buddy Art Cashin on with us at 11:30 a.m. Eastern time. David, back to you.
Be good to see. Good to see, Art. Bob, thank you. I still maintain those SoftBank option purchases, which did involve Apple as well, may have had an outsized impact in that period you were talking about.